Morning everybody, welcome to Stockradar Stocks on the Move for another week. Today's date is the 4th of May 2023. My name is Richard Lee and I manage the stockradar.com.au website for you. Okay, going for gold. Well, this week we're going for gold, which may seem a strange thing for me to say, but we've actually got some fairly interesting longer term resistance levels. We've seen the market recover a bit for gold, we've seen the stocks recover, Australian dollar come down, but now we're looking at some fairly interesting levels, so we're going to go through those, some of those stocks a bit later on. What's we got? Okay, let's go straight on to the top 10 trend intensity rankings for this week. And here we've got Auckland International Airport sitting on top there. Not much change here, a couple of ETFs in there. We've got Boral, car sales doing better, which you can see over there. Fisher Paykel, Magellan Global Fund, Mirvac, which has had a bit of a bump this week, I know, and QBE, which is doing quite well. So a mixed bunch there, but all generally doing pretty well there. I'll go through that a bit later on. So that's what we've got for the moment on the top 10 trend intensity rankings at the moment. And I said in trading tactics we're going to going for gold later on, which is a strange thing, but here we are looking at those gold stocks. Okay, right, first off, let's look at the Dow. Again, we did have a fairly encouraging move there, was it last week? Even this week, and it's banging on the door of this little resistance level up the top up here, but just can't seem to get through. So we've got a fairly clear downtrend pushing through here, lower highs here. You know, not a lot going on down there, so we can't really get too positive. And momentum index is just positive, so it's a little bit trying hard, but can't seem to get through at the moment. It needs something fairly strong to get through here, so we're just going to have to wait a little longer and see what happens. We're slightly more encouraged by the S&P 500. It's sort of banging on that door, which is pretty clear there. The volumes haven't been too bad. I would call them constructive. But again, we just can't seem to, even with the power, we can't seem to get through here at the moment. So we'll just have to be a bit patient. Nasdaq, similar again. We've got some good bottom. We've got some higher lows here, but we've got this resistance here, which is copying it at the moment. This is constructive, and the momentum index has turned positive there. So we're encouraged, but we're sitting on this resistance, so we're in a real dilemma at the moment. So that's where those indexes show you for the moment. Okay, now this is the one we're looking at, gold. Okay, so finally we've started to get gold. We've had a good rally through here. It struggled a bit. We've got a high low here, which is a good sign. We've had a fairly good test of this level now. It didn't really resolve from the challenge much at all, and now seems to have pushed through here. So it's very, very encouraging for gold. And the longer term, this is a significant level, which I would call that. So if we go right back to a while ago, we can see a big uptrend there. It's now corrected and consolidated, if you like, and we're now rallying here. And the interesting thing is, I think with this, if we take it in conjunction with these next two commodities, copper seems to be struggling. It's tried to push higher, but it really has. We've got a lower high here, starting to fail below the average, going to test a trend line. Plenty of activity going on here. And although the momentum index is just positive, it's falling flat again. So it's starting to turn down a bit again, having struggled to make any ground on this uptrend here. So the next one is Brent crude again, which now it's starting to look very, very bad as it starts to fall through this S1 level. It sort of tried, but never really did anything significant here. So the pressure is still down in crude. Volumes are okay there. Momentum's very negative, so it's really not looking all that flash for the crude price. Okay, so that's the commodities. Let's go to the ASX 200 index. Again, we're right on this top here again, this resistance level. We're sort of creating a slightly lower high up here, which is not a good sign. You know, you would think if you're a betting man, S1 would be the next stop at this stage. This is just positive, but not really. And if we look at this chart that I showed you before, this is with volume. This is the ASX 200. These are the highs up here. This is the weakness we had in the current rally. You can see that huge volume on the downside here. So I'm still looking at, the index is the top 20. Those banks are struggling, BHP is struggling. A lot of those stocks in that sector are struggling. So that's masking some opportunities at the lower end of the market. So we don't worry too much about this, but it does look like the pressure's there, which is probably not good for the banks and those other big miners, especially when we look at copper and crude at the moment. But some of the miners, like the gold stocks, might be going to go. So that's a good thing. Okay, so let's just now have a look at the ETF. So the stock pick count is up 1 this week to 53. There was no change in the stock picks themselves, 46 stocks of 160, but we had a new ETF put in there, so we've got 7 ETFs of 23 ETFs in there. So they picked up a little bit there in the ETF front. And our portfolio update as of last Friday, the conservatives were still 5 out of 20, so still 25%, 8% CAGR, and the rest of the Energizer portfolios are all 100% invested. 5 out of 5, 10 out of 10, 5 out of 5, and 5 out of 5. So, that's because that low end of the market is offering plenty of opportunities, and we'll have a look at a few of those today. Some good stocks are going up. Okay, so that's really what we've got in the ASX 200. Now we're going to start having a look at a few stocks. Last week we looked at Aristocrat, which is trying to get through, hasn't got there yet. BHP is weaker. James Hardie goes sideways. Ball. We've had a little bit of a pullback this week for sure, and a lot of these stocks have been trending. BSL's, BlueScope's coming back a little bit. Orica's sort of stalled, and Mineral Resources also weakening again still. So, we're a little bit, not a lot has happened in the last week. We'll have a few new stocks this week, but everything's sort of still in place as far as which way goes at the moment. So let's go off and have a look at a couple of leaders here. First off, I'm going to start with QBE, which we've sort of looked at for a while. We've been involved in this one for a while. It had a nice little breakup back here in October last year, and it's gone on pretty well. Trend intensity rating is 10. It's still going along pretty well, and if we look at this high we've got here, it really is a big high. It goes back about 7 years, so it's a big resistance level. If we can get a mark through that, get a breakthrough there, which is starting to do, it's going to look fairly good for QBE. Volume, we've got some selling here on this downtrend move, but the buyers came back in and bought it up and pushed it up again. So that was a pretty good sign, actually. Another higher low, which is what we like to see. Okay, momentum is strong, so that's good as well, and it's above the average. So everything there, trend intensity rating is plus 10 for QBE, and it looks like it's just pottering along quite nicely at the moment, so we'll just hang on to that trend for now. One of the other ones we've looked at for a while on and off, we've seen this big trading range. I've adjusted things a little bit here from there's resistance up here at the highs, because this area here has now got 1, 2, 3, 4, and are looking like 5 areas here. So this really is becoming the main level to get through. Okay, so we're still stuck in this trading range. A lot of stocks have bumped into their resistance levels this week and come back. But really, when I look at this down here, you can see some very good volume. Some very good volume. Pushing Transurban higher. Okay. So it's a good volume, momentum strong, it's above the average. So really, again, this is really the market we want to see break, which is up around 1520, 1530. That's the resistance level, that's the key, that's the price that's going to push things through. Cool heads keep cool decisions, prices never lie, all this sort of stuff in there. But this is really an interesting chart, because when it does break up, it'll be a fantastic opportunity, I'm sure. Okay, so that's Transurban and QBE, two of our leaders. I want to talk a little bit about some stocks. I talked about a few stocks last week in the newsletter that had come off an awful long way, talking about Temple and Webster, Cogue, and a few of these big stocks that have really had adjusted an enormous amount, and the importance of making sure you get out at the right time on these stocks, because if you don't get out, carrying those losses is an enormous weight, and it takes a long time to recover. So we just don't want that to happen, and we've got to prevent that from happening. So Lynas Rare Earths, I'm just showing you this here because I know there's been quite a lot of interest in this stock in rare earths, and it had a very good run through 2020, 21, 22, but then it sort of stopped. And we had a big sort of double top here and a fairly, lower highs here. So we were getting a fairly clear level of resistance or distribution, as I say, where the smart money is selling into the tired oil buyers, the stale buyers, and eventually we've got this really weakness down here, and actually Lynas is now down 45% from its highs. So it's really a matter of maybe setting those risk limits, because we just don't know, and I'm looking at things like Mineral Resources and stuff that are so good, and we just don't want to give them away. But if they're going to go down, we don't want to hang on to them. So Lynas here again, the last sell-off here, huge volume, momentum's weak, it's well below the average. We might get a bit of a spike down here at $5, but for the moment it's on a downward track clearly, and you do not want to be in stocks like this. Okay. Now, the other one I just want to talk about briefly is Qantas, which we've looked at many times, and we've just been amazed by the resilience of it. And once again, we've got a new head. Joyce has been there for a long time, has been a great a rudder for that company for a while. a brutal man, but he's still got his way. But this stock is still going up. I mean, the momentum is slowing here quite a bit. You can see there's some fairly good activity here, but it is still going up. So while this trend is intact, it's above the average, it's above the trend line here. You've got to hold this stock, and trend intensity rating is 8. So things come along that you think might be bad for a stock, but may not be so bad. So again, it's above its stop. The trend intensity rating is 8, so we would hold Qantas at the moment. And R1 is probably still a fair target, up around 740. Okay, now looking at some trend reversal possibilities. Zero has come down a long way. Just get that up there. And we can see here, we had a big distribution pattern here, then a big downtrend, and now we're getting an accumulation pattern down here, which is starting to form the pattern of like a trend reversal. We have got a slightly lower low there, not by much, but we've got some fairly good support here, and we're now starting to get, if I just get rid of this big tick here, and we look at this volume here now, we can now see that this rally, we've got a higher low here, we're getting some very nice volume through here, it's above the average, it's a nice steady swing up, so we're now starting to set this level here as our key resistance level to watch for a break higher. Momentum's turning above zero, everything's turning okay, trend intensity rating is now up to 0, having been quite weak for some time. So this is a cycle analysis. You've got your supporting trend intensity here, you've got volume, you've got momentum, we've got higher lows. We just really need, and this is probably the best level we can look at as far as resistance goes to trigger a further rally. And it's been down 50%. So 0 is an interesting one there. There are plenty of other examples that we have had recently of these sorts of bases. ResMed is finally recovering, Fisher & Paykel, car sales, Wesfarmers, Webjet, they've all had those reversals. New highs at the moment. Well, we've got a few stocks here. We did have a little short trade in Brickworks some time ago. Okay, let me just get this one up. Brickworks. Okay, so here's Brickworks here. We had a small trade here and we broke above here. We got stopped out pretty quickly. But here again now, because of the strategy we work in, if we do get a new high, we simply re-enter a stock if we've been taken out. And that's what would happen here. Brickworks is looking at an all-time high up here. We've got some bit of volume that's starting to attach here. A bit of positive momentum. It's above the average. So this will certainly qualify it if it does go to a new high here. So that's Brickworks is probably worth watching. In the same areas that you're probably looking at stocks like maybe Super Cheap or Auto, which is also approaching its highs, and that's one to keep an eye on in our trading centre. Okay, so this is a trend reversal and a new high. Now, if I'm looking for a tip on the trend reversals, I'm probably looking at ArbCorp at the moment, and it's another stock that's come back this week because the market was been a bit weaker. But generally, we look at this trend intensity rating is 0. We've got a nice little base here, support hold. We've got the downtrend, the accumulation pattern. It's now trying to break up. We didn't get enough trend intensity up here. But this now is turning into fairly significant resistance level up here. So this is our marker there. Volume is still a bit mixed. Momentum is just recovering to sort of the neutral level or just turned positive. So it's really the part of the wheels are turning there slowly. But you really can see there's some heavy selling here. And if we do get through there, we get that market imbalance where these sellers will start to cover themselves by buying back, added to the already strong buying, and you get that quick market imbalance advance. So that's what we're always looking for with these reversals, to get that bit of leverage when the sellers chop out and all of a sudden become buyers with the existing buyers. Okay, so that's ArbCorp. In that vein, we're also looking at Breville Group, Nine Network, and Netwealth. There's a couple of stocks there that are looking quite nice in this sort of vein. So keep an eye on Trading Centre again for those stocks. Okay, now on the other side of it, trips in the new high area we're looking at. Well, Cochlear again, a bit like Transurban, we're looking and watching and wondering about this stock for a long time. Just waiting, because people always want to get into these stocks. They're good, whether it be CSL, which is also looking interesting. But Cochlear's now got to its high again, and we've stopped briefly at the moment. But this move up here has been fairly constructive. It was fairly swift. Volume was reasonable. I'll just squeeze this one up a little bit, give it a bit of that tick up there. So you can see here, volume has been reasonably solid here, especially to this last part of this rally here. And now we've also got good momentum and above the average. So everything is set, and that's often happens with these things. When we're stuck in a trading range, it will start to move off higher. Things will start to turn, but really we just need to wait for that 250 level to fall. And that's a pretty good, that'll be a pretty good sign if that broke because that's a big all-time high resistance level. Trend intensity rating is +1 for Cochlear, and a break above will be very, very interesting, I think, there. Okay, now, Medibank Private. Well, hacker's delight maybe, but you know, it had a big collapse, and I think you'd probably find there are two types of collapses or two types of market pullbacks. One is a fearful one, and one is a systemic one. Now, the GFC was a systemic one. Something like COVID was a fearful one. And just like Medibank Private, although they got hacked and it's a very nasty thing, it really doesn't affect too much as far as their business goes. And people were just scared and they just sold the stock off. And when you get a sell-off, a fear sell-off like that, they inevitably recover very quickly. And it's exactly what Medibank Private has done. It's just gone bang, bang, bang. People have bought this. The smart money got straight back into it, taken advantage of the sell-off. And we did get a slightly higher low here, not that matters that much. A small trend reversal, which didn't really get qualification because it was too quick. So we were just really waiting for this R1 level, and amazingly enough, it got here so quickly. Here we are, ready for a break high maybe. So Medibank Private, all-time high, sharp recovery from a fear collapse. We've got some reasonably good volume all the way through here. Very positive there. Momentum is good. So again, another new high opportunity with Medibank Private. Trend intensity rating is +1. All set and ready to confirm a break higher above R1. So that's Medibank Private. Others, new high candidates. Gold Road, which we'll look at in the gold sector. NHF, National Storage, and as I said before, Super Cheap Auto there as well. Okay, so the only other one I will just show you again is a little Nanosonic stock, which we have looked at before. I'm just showing you how we've got this break here. We're now starting to get this move above this $5 level, as again, these sellers here are going to start turning to buys, and you start to get a move higher fairly quickly. Some good volume pickup, good momentum pickup. So it looks pretty good, Nanosonics, as we have been waiting for quite some time. So there we have Nanosonics. I just thought I'd mention that one in there for you to have a look at. Okay. Trading tactics, really, I just really want to going for gold was what we were talking about today. And we looked at the gold price before, and it looks very interesting. This is the chart's out of date, as we've got the one here, which is actually up to date. And this is the one showing it's starting to break above here, which is a really good sign. So gold is looking good. So that's testing its highs, which is important, trying very hard. Then we go to Gold Road, which is also testing its highs as well. It's come up to here. We've had a fairly good move through here. If I go back to the chart itself, we can see Gold Road Resources. If I just clean this up a little bit. Okay, we've got some good volume here. Swing it out a little bit. We've got some good volume coming through here. Just push that out a little bit further. Okay, now we can see what we've got here. Some good volume, good momentum. It's above the average. Again, we're just really waiting for this R1 to break to signal the move there. So it's all tying in with the gold price, gold sectors. And if we go to the next stock here, we've got De Grey testing its highs as well. Similar situation to Gold Road Resources. We've had a nice good rally through here. We've just waited because this is a trading range thing, and it's not our thing to do these sorts of trading range. We wait for the break, and it's been a really nice build up here, now above the average, high, low. There's been some very good volume through here, and also the momentum is very strong. So it's looking pretty good, De Grey Mining. Interestingly, testing its highs again. Bellevue Gold, another little one which I did cover in the newsletter last week, for those who want a bit more analysis on this one. But it also looked pretty good. It had a race to its highs not long ago. It came back, found some support at this old level here. It's sort of like a point of control area, and is now rallying through the highs, and it's now gone straight through the highs on some very good volume, some very good momentum. So this also looks pretty good as well. So we're starting to get in that picture for gold. So I guess, when I look at gold, it's very dangerous, very volatile, and I'm very, very wary of it, as you know. But we're starting to get a picture here of something that might be significant, might be about to happen. So we've got to watch these things and observe them. And again, still, as long as we manage our positions, and if you want to take half a position and widen your stop out, certainly you can do that. So just make sure that whatever you trade and however you trade it, your risk is managed properly to make sure that matches your own risk profile, so that you can sleep at night. Okay, the other stock here is Evolution, which is not anywhere near its highs, but it has had a big downtrend. It's now turning that downtrend with a high low here, and we're getting this area here. If I go and have a little closer look at Evolution Gold, we can see in here that we're getting this high low, and there's three things I look at: the average, the horizontal resistance and often a downtrend line if it's available. And there's 1, 2, 3 good points on this line, so it's a fairly valid line. So this is sort of the switch zone that I look at that says all of a sudden negative below there but positive above there. Then if I've got things like a bit of volume and a bit of momentum to support that, I'm starting to get myself a fairly compelling picture that the trending attributes are starting to develop on evolution. Okay, so that's evolution. So the switch is on there, and the final one is Northern Star, which has been a little bit of a different one, but it's starting to rally quite nicely. We've got a high low here. We've just made a new high. Volume has been good. Momentum is positive, so R1 may well be a target for this one as well. So that's Northern Star. They're looking pretty good, and also so all those gold stocks there for you to have a look at and see what you think. And if you want to trade them, good luck to you. Just make sure you manage them properly. Okay, so that's most of the stocks I've got for you today. What's going on at Stockradar? The newsletter came out a couple of days ago. Cover all the energy stocks, which I know have been struggling a lot. I talk about the education lifeline in my intro and how important that is. In Radar's rant, we talk about keeping a tight rein on trading costs, and I'm talking mainly about losses and managing those losses to keep them small, which is it's probably one of the biggest cut part of our costs in our business. If we're not careful. So that's something I talk about a bit. There's also some new tables in there for you to have a look at, looking at some downtrodden stocks where the opportunities are for some high yielding stocks. Demerger new listings provide an interesting opportunity, so I talk a little bit about that. And there's also a new highs table just to make it easy for to sort through the new highs and have a good look at that. And some new tables on the stocks hitting new highs and hitting new lows, which is always an interesting thing to look at if those are looking for the dogs of the Dow type theory. Looking at those stocks hitting new lows is an opportunity for you there. I'm taking 2 weeks holiday in May, which I think I mentioned. No stock picks on the 22nd for subscribers, no videos for YouTubers on the 19th to the 26th of May, and there'll be a slightly delayed version, a shortened version of the newsletter in May after I come back. Okay, so that's all a bit about gold today. You know, it's something that's interesting. This is a significant change that we're seeing in the markets, I think, at the moment. So we've just got to be very careful, but there may be an opportunity, and you don't have to go heavily into this, but it may be something you're interested in. So it looks like there's some opportunities there for you to follow. So that's it for today, and good luck if you're going to tackle those gold stocks. My little word of wisdom today is basically in the markets we take calculated risks. Calculated risks must be managed properly. Otherwise, they become uncontrolled risks, and that is a money pit. Okay, so make sure you manage your trades properly. Okay, stay safe, watch your trends, call me if you need a hand, heed your stops, and I'll see you all again next week for some more insights on Stockradar.